What's up, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex, and today we're going to be going over AMC stock, why it's dropping, and how you can buy shares of AMC stock at a lower price and get paid for it. So let's get right into this video. So AMC fell on some news. They actually fell after a research house disclosed its short position. So Iceberg, I think it's called, short seller Iceberg Research, tweeted on Twitter that they made a bearish bet against AMC stock, and this is causing a huge dip in the market for AMC stock today, dropping as low as 10%, going down all the way to under $48 a share. But the good news is that even though the stock dropped this much, it made a pretty good recovery, all the way up to $52 a share, which means that the retail investors are still holding their ground and we're still buying up the dips for the stock. So a lot of people saw this as a really good buying opportunity when AMC dropped to $48 a share, picked up some shares, and now the stock is recovering pretty nicely. We're still sitting above that $50 support line. So AMC stock is looking really good still, especially with how many institutions are shorting the stock still being at this high of a price point. So as long as retail investors continue to buy the dips, AMC could definitely see another short squeeze in the future, with everyone doubling down on their shorts, because this is just, it's getting ridiculous at this point with how many like research institutions are shorting this stock still after 80% of retail investors own 80% of AMC stock is owned by retail investors, which means that this movement is really strong. A lot of people are just holding the shares. I'm still holding my 200 shares of AMC stock, and I'm continuously selling puts, which is pretty much getting paid to potentially buy stock at a lower price. But enough of that. Yeah, so AMC stock dropped today because of this disclosure, and it's a good dip for a lot of retail investors who are looking to get in. So let's go over the strategy on AMC, how to buy stock at a lower price and get paid for it. So let's head over to the options chain. And if you're new to options, you're going to have to go into your investing settings and turn on options if you are using Robinhood. So we're going to go to the options chain, and we are going to take a look at the sell puts. Because remember, buying puts is going to be bearish, but selling puts, writing puts, also known as cash secured puts, it's a neutral bullish bet. It's basically getting paid to buy stock at a lower price, potentially. So let's take a look at something like a July 16th expiration date. And we can see I'm currently selling a $50 cash secured put, and it's around $550 of premium to open that. So let's say you're okay with buying the dip on AMC. You're okay with buying shares at $47 a piece. Right now, it's currently at $52, so it's $5 under the current stock price. And if AMC drops to $47, you're okay with buying the dip on that. Now, this strategy is really good because it allows you to buy shares at a lower price, and the best thing is you get paid for it. See, as we can see here, you'll receive $403 of premium in order for writing this put. And basically what's going to happen is at expiration, if the AMC stock is above $47, that contract is going to be worthless. You pocket that $400 of premium in just 2 weeks, which is some pretty good profit if you ask me. And if AMC drops below 47, you're going to have to buy 100 shares at $47 a pop. But you still get to keep your premium no matter what for writing this contract. So if you factor in the premium to your cost basis, it's going to be around $43 a share. So that's going to be pretty good. So even if AMC drops to say $45, you're still going to make money on this options trade, which is why selling cash secured puts is my favorite strategy. Downside is you're going to need a ton of capital. A lot of you have smaller accounts and don't have thousands of dollars to play options or invest in. So you will need $4,700 of collateral to put down, because if AMC goes below $47 by expiration, you're going to have to be purchasing 100 shares at $47 each. So that's why you need to put down the collateral. They don't want you to definitely go naked, selling naked puts, because that's unlimited risk. You definitely have to have enough collateral in order to open this cash secured put. So that's how that would work. And if AMC happens to skyrocket, your max profit is still going to be $403. So that's also another downside. Your max profit is a bit limited, but it is consistent and it is safer than outright buying calls or outright buying shares. It's just a way to collect weekly premium, and it's one of my favorite strategies. So I'm doing a combination myself of holding 200 shares and then selling bi-weekly cash secured puts in order to capitalize on the premium and potentially buy any dips that AMC may occur. Because remember, we can't perfectly time the dip, and this is just one way to buy stock at a lower price. So if you have any questions, leave a comment down below. If you like the video, like it, and of course subscribe if you're new here to the channel. It helps out a lot. Thanks for watching.